Good morning, traders. It is Thursday, August the 1st. Taking a look at the charts, we got the SP500 futures. And yesterday, pretty wild day. We talked about it in pre-market yesterday. There's going to be a big volatility day, lots of shakeup, big news waiting with the potential rate cut, which we got the quarter basis points. And we saw the markets really take a beating yesterday. I think it was priced into the market, and we saw that stocks sell off. We saw everything kind of drop other than natural gas and the dollar, kind of bucking what you normally think would happen. You can see yesterday's big drop in the market. The market actually got into an oversold territory. We got pretty close to our overbought indicator up here near this 3. Whenever we get to 3, that's usually a sign that we're hitting a short-term bottom. Last time we did that, we saw the market put in a bottom here and have a bounce up. And this was a news-based bounce, so we'll see if we can get some traction here. Our short-term cycle is pointing to higher prices over the next 2 sessions. We'll probably get some pretty big volatility in the market. The market did sell off last night. It's recovered back again to be somewhat flat on the session at this point, but we've got an upward bias kind of set for the day, but it's going to be pretty wild. And usually we see 1 to 3 days of volatility after this type of news. So we could very easily see this chop around for a while. And the question is, can the market hold this kind of significant level here, the SP500, or is it going to start to break down and start to extend and have a much deeper correction like what we saw back in May? And we've talked about this. Let's just zoom back here to May. We are near this very similar type of setup in the market where the market could very easily go into one of these big sell-offs here, and that's the concern. The market's very close to rolling over. Today, potentially, we could start to see if it doesn't rebound sharply, the momentum will actually be shifting to the downside, and we could get this carry-through move, this follow-through selling to a much lower correction point. Could be the 50-day, could be down near this previous low and previous high in the market, so somewhere down over here. So we're going to keep our eyes peeled. Potentially, if we get the market reversing over, we may get into an inverse ETF for this move down. We did do the same thing. We bought an oversold level. We saw a pop. We got out over here for a positive play, and then we ended up going short, and we caught the drop over here. And that's what we're looking for, is a similar type of setup at this point over here as well. Now, if we take a look, let's pull up the chart of the dollar. Usually when you get a rate cut, you see the dollar move lower, but I think maybe people were expecting a 0.5%, not just a 0.25%, and we saw a big pop in the dollar yesterday, and today we're actually seeing the dollar continue to move up. It's posting almost equally strong gains. Let me just pull up if I pull up the US dollar chart here, you can see on FinViz. Here's the FinViz chart. Here's yesterday's big rally to the upside. Today we're seeing it up another almost 0.4%. So really muscling its way higher. Strong dollar putting pressure on the precious metals this morning. They're selling down pretty hard, shaking the market, and we'll see how things recover. More or less everything in the precious metal sector is getting pushed down to oversold and support levels. Today we're going to see a big move down. If we look at gold, gold's actually still holding up the best because it's the least volatile. It's seen as the largest safe haven. We've still got all this price action through here, this kind of pattern. It's trading down and still holding above the 20-day in support. So it is holding up the nicest and holding its ground, which is what we are long. But if we take a look over at silver yesterday pulled back to the lower end of this range. Today it's breaking down below to flush through this level. It's coming down to tag this 20-day. It's actually a very nice setup if we can find a support level here to tag this 20-day. When you first fall down in the first real tag of a 20-day, when you start a new trend, is usually a level that can be bought. You can see it's come down to this level this morning, starting to bounce today. And we'll see if we get a knee-jerk reaction. We could still see a couple days of potentially sideways or a bit lower pricing as it tries to lose this momentum and reverse to the upside. But this is a news-based drop to a key moving average. It's oversold, and hopefully by the end of the day we see it reverse, or by the end of the week here, pop to the upside or hold its ground, because it is still set up. This is a nice shakeout, getting most of the people who are in up here, trying to shake them out and before it goes higher. If we take a look over at gold miners, look at GDXJ, big down day yesterday. Again, huge emotional pop over here, this green bar. And usually when you get an emotional pop like this, and I think it was on this day I did a radio show talking about how everyone was piling in and getting all crazy, and usually you see those type of moves given back. Well, that was given back yesterday. And now we're down to the 20-day moving average as well and oversold. We're going to see a gap lower. Today could be one of those gap and go days, fingers crossed, where the market gaps lower and then it goes higher and just it becomes a big standout reversal bottom, and we see the markets go higher. It's going to take a few days for the market to digest the news, but falling rates is typically not good for the stock market. Last time we saw that, we saw the bear market take place, and we should start to see the precious metals and related assets in that class move higher. Looking over at natural gas, strong move yesterday, getting oversold and then having a pop, big short covering pop yesterday. Today it's up again another 4%. Really strong move in the natural gas market. It's getting overbought today. It's getting into resistance, into some key moving averages. We're starting to get some cycle highs there today, but again, we're still looking for the potential. Let me just zoom in a little bit here. We're looking for a potential move all the way down to the 2 level. And sometime this month or September, we're looking for a potential fade down to this 205 or the 2 level for another potential move higher. But overall, natural gas long term is getting down to a level that it shouldn't stay down here for too long. We're hoping it's going to continue to fizzle out down to this 2 level, and then we could get into a new play. But overall, knee-jerk reaction move. It popped and rallied, and now we're going to let it kind of do its thing and fizzle out. See if it's going to build a base to go higher, or if it's going to continue to pop and then fade back down like we've seen in the past and get down to this 205 level. Looking at crude, down 1.75%. It's kind of chopping around. It still has somewhat of a bearish formation in terms of prices sold off. It's got this bear flag, but it did kind of pop and break that bear flag. It's starting to roll over. We'll see if this is a short covering kind of little squeeze, and then it continues to go lower to down to test this 51.50 area, this previous low from early June. This type of pattern we're seeing here is very similar to this sell-off, and then this type of move here where it consolidated, got a little bit of a roll and kind of a short squeeze, and then the market sold off and moved down for its measured move. So we'll see how that goes. Overall, we had to get out of the trade. We got to manage our positions because you never know if something's going to continue to rocket higher. You can't hold on to a loser. You've got to be able to just bite the bullet, get out, and wait for a new setup. And over the last couple weeks, I've been talking about I talk about it when I'm looking at the SP500, but it carries over for all the markets, is we're at this point in the market right here that I've been talking about, that we're in this point in the market where we're on the verge of some major trend changes, and we could be seeing sell-off in equities. We could be seeing potential oversold precious metals sell-off, or we could see them break out. We're on the verge of a lot of big new trends taking place, and we're going to have eventually, if you go back and look at our historical trades on our public website, we go through waves where we have a bunch of winning trades, and then we'll have a cluster of losing trades. And the cluster of losing trades is simply when all the trends start to reverse, you're going to get price is going to get choppy, you're going to get shaken out of some trades, you take a few losing trades, and then you go back into some new another wave of winning trades. So we're into this tough time where the market's starting to chop around, we're getting some big news, and things are getting choppy. So we'll see if the market is going to extend into a new downtrend for equities. We're going to see if precious metals are going to extend to the upside or if they're going to roll over. But overall, everything is in this consolidation choppy phase, and we're just waiting for a new kind of leg to the upside or a leg to the downside to take place for the next kind of wave of winning trades. That's kind of where we are. That's just how trading works. You have good times, and you've got some times when they're tough, and that's when you've got to be able to pull the trigger, get out of losing trades, because it's hard to get out of losing trades. And if you hold them, though, you'll blow your account up, take massive losses, and that's just, you got to be able to get out and admit that you're wrong and move on and for a new trade. So that's where we're at. We're in this choppy time, and we're waiting for continuation rally leg to the upside or a new trend to the downside to get into position for. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.